Today, the Fed lowered interest rates for the second time this year. It hopes the cut can help bolster the strained U.S. job market. Connor Hansen here with details.
The Federal Reserve cut interest rates by a quarter point for the second time this year.
Tariffs are pushing up prices in some categories of goods, resulting in higher overall inflation. A reasonable base case is that the effects on inflation will be relatively short-lived.
Fed Chair Jerome Powell has the task of balancing the fight against inflation with hopes of boosting the job market. Two Fed board members wanted a steeper cut of half a point.
We have, strong views across the committee, and as I mentioned, there were strongly differing views today.
Powell has been constantly criticized by President Trump, who called for more cuts earlier in the year.
I call him Jerome Too Late. He's always too late. Jerome Too Late Powell.
In a challenging hiring market, major companies like Amazon, Target, and UPS have recently cut thousands of jobs. Those layoffs were in the news, but the government shutdown has slowed down other key reports by the Bureau of Labor Statistics.
Donald Trump's own former head of the Bureau of Labor Statistics has said that by September 30th, the data were all collected, the data were ready to go, and Donald Trump and his administration are keeping it under wraps.
The news came just ahead of President Trump's highly anticipated trade meeting with Chinese President Xi Jinping, and as the stock market has been surging, largely driven by AI.
Last month, Fed officials also predicted a third cut happening in December. Powell says that's not guaranteed.